This is Radio Free Wall Street with Lee Adler, on the web at radiofreewallstreet.fm and wallstreetexaminer.com. Hi everybody, this is Radio Free Wall Street for Wednesday, February 25th, 2015. I was just looking at the headlines on Bloomberg, and it seems like there's no news at all other than Janet Yellen's testimony in front of Congress, where she really hasn't said anything new. We're going to take a look at the ECB's balance sheet because big changes are coming there next week. We're going to look at what to expect there and what has happened this week that may give us an idea of what to expect. Also going to consider what the federal real-time withholding tax and other tax data is telling us about the performance of the U.S. economy in February and what that's going to mean for March data releases, and in turn what that might mean for the stock market. We'll take a look at some of the charts for stocks and bonds and the economic data, and including the recent housing data releases that just came out over the last couple days. Since I suppose you're wondering about Janet Yellen's testimony before Congress, I'll just spend a minute or two on that. She basically really had nothing to add to the remarks that we found in the minutes last week that I went on about at some length. Probably she did backtrack a little from the threat to raise or attempt to raise rates at mid-year. But when we look at the tax data, we see a lot of strength. And so I think the economic numbers are going to continue moving in the direction of forcing their hand, whether it's at mid-year or in the second half. I don't know. But there's going to be some attempt made later in the year, I think, to go ahead and try to get the Fed funds rate up or some measure of short-term interest rates. The problem that they're going to have is that with all the excess reserves, all the excess cash in the banking system, they may wave their magic wand and say, okay, rates go up, and we get a little bit of an upward flurry in rates, but then the banks start competing with one another again to try to put this money out in the street. And we begin to see that the Fed has a problem in trying to raise interest rates without removing cash from the system. And that would require actually selling assets. I think the Fed is aware of the problem, and that was pretty clear if you read between the lines of the minutes. And so I suspect we're probably going to begin to see some discussion, some remarks by some of the Fed heads about the possibility of selling assets down the road. And maybe we'll see what kind of reaction we get in the money markets to those kind of comments when and if they occur. But I just don't think there's anything new here. And I think we've got to keep an eye on a couple of the other central banks and what they're doing.